Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Tuesday, tax day, April 15th, 2025. Time about 6:45 p.m. Central Time. So, my friends, a pretty crazy situation in that every single day we keep getting tweaks and changes to what this tariff policy is, and businesses simply can't make decisions like that. I appreciate what the Trump administration is trying to do, but I criticize them. Somebody's got to say it. You can't be making a tweak every single day. You got to have policies that you've got in place and businesses can adjust to them. But every time you change them, there's a problem. Now, part of why the NASDAQ is getting hit tonight, down 243, is today, the Trump administration came out and told NVIDIA that it's going to have to get licenses for selling its H20 computers abroad. That's going to cost them potentially, you want to read this up on Bloomberg and some of the others, maybe $5 billion in licenses. I don't care how big you are. Those are big numbers. Now, admittedly, that's not your top end chip. It's not the newest things that they have and so on, but it is very, very important. And, there's other chips down the road they're going to do. But this trade war between the U.S. and China, it's extremely, extremely out of control. And at some point, these two guys have to figure out where's enough pain for both countries to sit down and try to work something out. I think that's what everybody's trying to hope for. On the energy market, today you had the IEA came out. And they're not looking forward on growth for world economies in this year or next year. They're looking for retreats, big ones, oversupply of oil. And we could be headed into, if you read some of their reports, maybe the back in here, the mid 50s, maybe the $60 area here. So there could be more pain yet ahead of us, especially if OPEC continues to produce. I covered that in my research letter today so everybody could see it. A lot of this is in tonight's letter that not everybody has seen. It'll come out in about, 30 minutes or so. I have been looking and wondering where the dollar is going to try to make it stand. Now, if you use price counts that we use at Linn, one of the big areas is the 98, 99 level. You're there. One of the big areas in the euros between this 113, 115 zone, and you're there in one of those areas as well. You have a lot of news coming out tomorrow. You got Mortgage Bankers Association at 6. Advanced retail sales, 7:30. The Federal Reserve released their monthly industrial production and capacity utilization. That's at 8:15. We're going to get the business inventory data at 9 o'clock. Then we get the National Association of Home Builders are going to release their monthly market housing index. Now, this is not new sales, existing home sales. This is the index. The Bank of Canada, which way are they going to go with interest rates? I saw a recent poll, and it was a minor amount are calling for the market either way, all right? I don't know what to do with that. I mean, they're right on the fence post. We'll see what happens. The EIA petroleum stock estimates, they're going to come out at 9:30. The Trump administration, as you heard me say, put licensing fees on NVIDIA today. You saw that China said it's not going to buy Boeing planes. It's going to put a halt to all that, and U.S. air parts. Well, it's nice to say that, but the fact of the matter is they don't make much of a commercial airplane that can fly all over the world. So they can either go with Airbus, they can do a couple of other things, but what are they going to do for all the parts for their Boeing? I guess they're going to ground everything. So you get to the point where you take out two guns, you shoot yourself in each foot, and I guess you've made your point. And that's what I'm trying to get at here. When we look at the S&P on a weekly closing basis, you're down a fraction for the week, 8.7 points on a close. So, you just take the current price and you assume that's the close tomorrow. Just gives you an idea where you're at. When you and I take a look at this chart, you've had a nice bounce, but now the market's starting to languish. The reason it's languishing is everything that I'm giving to you. What is the policy? Where does it get cemented in? How do we get things to finish up? And most important, and I'm going to repeat this, most important, where's the first deal already? We keep telling how close they are on 15 deals. Where's the first deal so that we know that the Trump administration can make a deal? So you've heard me so pro-Trump, and now you're hearing me a bit the other way, because I'm not political. A lot of people think I am. I'm not. I want what's best, period. I don't care the party that does it, all right? That's a little bit different. It's what's best. And now the question is, I understand the road to get there. My criticism isn't what he's doing. It's how he's doing it. I'm dealing with President Trump. I'd like to see something that businesses can hang their hat on. When we take a look at where you've been in this rally, this is a bear market rally so far. That doesn't mean if you close over the 18-day average, I suddenly won't get friendly. I could, real easy, but you haven't done it, and that's what it takes. So far, because the market's been under the 18-day average as you rally up, I use the 18 as my line in the sand for do I have a bullish or bearish bias? Under it, bearish. Over it, bullish. So it's a bear market rally when the swing line is making higher lows, higher highs, which is an uptrend that can't get through that number. Same thing going on right here on this chart. You see it even clearer. And momentum, it's gotten out of oversold condition. So if it were to start another down leg, it could get ugly. I'm not saying it has to. Right now, I call the chart very neutral. Swing line up, bias down. NASDAQ is identical. You've gotten rid of the oversold condition. You've had a rally into the 18-day average. You need to close over it and stay over it to now start getting something that's friendlier to the market. I'm not saying that's going to happen. You're up at a resistance point. You're not down to a support point. Same thing in the Dow. Look at how you've come up and you're fighting that battle. So these three indices have been very much in the bear camp, and you finally had a rally, a relief rally. It's no more than that so far. You can't even get close in the Russell to the upside. So which market do you think would be my favorite if you wanted to go short? And I'm not saying I have a new signal to go short, but which one? If I'm bearish, I want to go with the weakest, not the strongest. When we come to the DAX, this will come up right here. Notice the bear market rally has gotten to the 18-day average and it closed over it. Now, that's going to give the bulls a little bit to bite on. The problem they're going to have is the market reopens, you're in overbought territory tomorrow. You're already there tonight. So if you're buying an overbought market, where can you go? That becomes the problem. I think you're due to fight here. You could stretch a little bit more, but I think you're in borrowed territory purely because you got overbought on the rally. In the 10-year note, tell me where the zones are. Look at how the market, when it was all the way up here, fought 3 days. Right through here, the 18, fell into the support of the Bollinger Band and the 100-day average. And on the rally now, you're fighting at this forward direction. So the market's saying which way? So far, it's a rally with downside bias that's run into resistance right there. The 2 years trying to be a little stronger. Why? Because that's where the Fed, anything the Fed does affects the short-term money. As you've heard all the Fed members say, they don't control the 30-year, the 10-year notes. That's under the market's control. But as you're down here, you now got 3 days in a row where you're trying to stay over that 18-day average. So the bias is grabbing hold where this market is trying to be friendly. It does not have a buy signal, but it most certainly isn't a sell signal yet. In the dollar index, I wrote yesterday, because I couldn't talk. I'm having a terrible hay fever attack now for 48 hours. So you can hear it. It's not a cold. It's terrible hay fever right now. The pollen count is crazy here. Lower highs, lower lows. As you can see, the market moving to the right-hand side of the Bollinger Band. It's not a sign that you're bullish, but it is a sign that the market's in a bearish pause. Very much so. And you're in a bullish pause as you've done the same thing, the flip-flop of it in the eurocurrency. I am not saying I am bearish here, and I'm not saying I'm bullish in the dollar. I am saying both have made what we at the Linn Group call some price count numbers. And the question is, what do they do next? If you've never gotten our price counts, you want to take a look at them, especially on these currency charts. The British pound has gone in waves. Bollinger Band, Bollinger Band, Bollinger Band. And I mean, it's given you no chance other than you took your dart, you threw it, and you said, I'm going to buy a break. I'm going to sell a rally. And maybe you got lucky. Probably didn't, but maybe you did. It looks easy on the chart. It isn't. Because if you're any form of a trend trader, it hasn't been trending. It's been zipping, is a better word, back and forth right here, and it is overbought. Bitcoin is fighting now for support. If the stock market were to bottom, this market's making it very clear. It looks at the NASDAQ, and if that goes, this probably goes. It's fighting a battle right here at the 18-day average to try to figure out what to do. The current pattern is a lower low, higher high, like all the other charts I just showed you. None of these are in setups that make sense to me other than if you're a day trader taking advantage of the swings. But I'm not seeing an easy move in and move out or a way to catch a trend with a reasonable dollar risk. And I was watching today numerous Bloomberg, CNBC throughout the day. I'm hearing this from analyst upon analyst. It's a time to have a lot of cash. And they were talking stocks. The commodity guys, yeah, it's a rough road right here. And they are 100% correct on it. So why get stepped on? There's always another trade. You know, it's like a bus. There's always another bus. There's always another plane taking off. You'll catch your moment. In the energies, the chart looks bearish. Lower highs, but you have higher lows. So while I've got two arrows pointing down, you have to take into account where are the lows. And you've gone into this sideways zone right here that it's got to come out of to tell us what goes on. Obviously, you take out the low here, you're probably talking that 60-cent zone I was just saying. Take out the high here of 65.90, and all of a sudden you look like you're going to get more short covering. You get the same pattern going in WTI oil, WTI. Gasoline, where's the spring-summer rally? I read one report said, oh, you peaked out in the April number. Well, there's truth. You can do that at that point. But you normally get a little later into this May period, and we have not had it. Not at all. And you're already hearing from the travel industry that because of all these tariffs, because the stock markets have fallen, because of the uncertainty, already the airlines are starting to cut their travel schedules. So I just saw United was coming down with a 4% cut in what they're going to do later in the year. So as you see all this, you start thinking about it. You should, wondering what's going to happen. I heard one person say properly, well, Mexico will probably be a big destination. If you ever gone to Mexico in the summer, it's not a lot of fun. Lower highs, lower lows. In the nat gas, I'm looking for support right here. 321 to the Bollinger Band, 321.40. If you can close under that and get an embedded reading, it gets scary on the downside. You can accelerate this market 275, 250 level. That's 50 cents from here. So it's something that you got to keep your eye on. Basically, what's happening is these markets are like balloons, and the balloon part is getting burst and these markets are coming down. And that's what seems to be going on in good part because of all this tariff news that has just literally got people concerned about where they're at. But as a chartist, you know, one of the things I like to do is teach. And via the Guide to Technical Indicators, volumes 1 and 2, you learn what I'm talking about here and a heck of a lot more. I've read the new brochures that have come out on this, the revisions. This is the classic. This holds up over and over and over. It's all the RSIs, the MACDs, the slow stochastics. You're going to get time-price relationships. That's what they call them then. They're your Rune indicator, pivot points. It's all covered here. So how do you get this? It's free. Go to iraepstein.com under the word research and get it right. Not there. Free offers. Sorry about that. iraepstein.com, free offers. That's where we put it. It's also in our futures trading kit. You have yourself a great evening. I'll catch up with everybody first thing in the morning, hoping my eyes stop leaking and my voice comes back. Take care.